And as we do every Wednesday at 40 past the hour, we're going to jump over to our man, Teddy Kekstadt. Folks, you can check out Teddy's outstanding Tiger Forex Report. He puts out new issues every Monday, weekly report, new issues Monday morning, updates throughout the week when warranted. Comes with a 30-day money-back guarantee, and it seems like we always got market action lately. Teddy Kekstadt, good morning.
Good morning, Tommy. How are you?
I'm doing well. How about yourself?
It's nice and cold in Chicago. We got some about 2 inches of snow coming today.
You know, Teddy, I was going to ask you about how the weather was, because I know, and some of us know, man, I was just looking at pictures of the snow we have in Florida, and I said to myself, man, if it's snowing and it's cold in Florida, then what's it like in Chicago? But nonetheless, stay warm out there. We got some snow in Florida. Pretty remarkable. Where do we start in this market, Teddy? We're the market trying to decipher, what the new Trump administration looks like. We're getting headlines out there, of course. There's some posturing, but we got a little bit of a pullback in the dollar. Yield sitting, not too drastic of a move. But what's your general consensus as we've gotten a little bit of an indication of where things at least start for the new Trump administration?
Well, I like the pullback in oil. I think that's a good thing for as far as where the U.S. dollar-yen relationship may be going. Outside of that, I think we're going to be kind of sideways into the next Fed meeting. There's a lot of things that have to, just because a bunch of executive orders have been placed and the conversation is going, these things don't just happen overnight. So I think that we have a good perspective now on the way some trends are going to go. Okay, so and I'm looking forward to that. I think one of the key things is to see how the Fed reacts. And I think that obviously there's pressure on them to cut rates, but we'll have to see how the numbers come out. And we have some interesting things, like we have the, what is it coming out tomorrow? We have the CP. Oh, so we got jobless claims tomorrow. We got the CPI for Japan, which is a big number. So between the Bank of Japan, what they're pondering, the CPI for them and these relationships, I think the Fed is going to be watching all of these numbers, not just ours. And right now it's really a hard, tough call. Before the last Fed meeting, even before the last couple Fed meetings, I had a really strong bias, if you will, as to what they may or may not do. And to be quite honest with you right now, I wouldn't say I'm scratching my head, but it's very, for the first time in a while, there's a vagueness as to how the Fed is going to be moving forward, if that makes any sense. Before Trump was inaugurated, they were saying that, half a point this year is probably what they're going to do, and they had a little bit of transparency as far as their forecast for the future, but that's diminishing, and I think it's going to be really important to watch not what they say, but what they actually do in this next meeting.
Yeah, remarkable. That's a week from today, and a lot of focus on the tariff talk was February 1st, right? That first night, Trump was saying maybe February 1st. Interesting that's on the flip side of that, as in not going to be a lot of resolution. So how do they handle that? And we see some of that action with volatility in the markets, though, for sure. You referenced you like the action in crude in terms of how that relationship plays in for the yen and the U.S. dollar. And I know you've walked us through that so many times for countries that are producing, countries that are consuming. But for those listeners that haven't heard that, right? I think that was such a valuable lesson myself, and it ties in so well. Crude at 75. I just pulled up the yen. We got weakness. But could you walk through when you say that, right? So we have crude pulling back a little bit, and then how that plays into one of those currency pairs, as in the dollar yen, and the influence that sometimes those commodities have, whether you're a producer or consumer. Could you break that down? Because I love that one.
Sure. In fact, if you look at the U.S. dollar yen chart, or the way it is now on the daily, they spiked a little. They were buffering up against our critical resistance zone that we had in the Forex report, and we were talking about, is it topping out? And remember, that was when oil was still spiking high before the inauguration. Now, last week when we talked last Wednesday, that's when oil spiked up at around $82 a barrel. Now it's trading around 75. $7 slide in oil over the past week without any news or any global geopolitical reasons or whatever outside of an inauguration. That's a big deal. Now, what has happened to the U.S. dollar-yen relationship in that time? In that time period, we've been sideways to lower, so meaning that it's bearish pressure. So that's where we get the oil relationship with the U.S. dollar-yen. Okay, so just as the yields were pulling back, oil was coming back, Japan is an oil-dependent country. That's big for the currency relationship, because as far as how much oil that they demand, as well as how many dollars they demand as far as purchasing, because they purchase in U.S. dollars, so they have to convert yen to dollars. Okay, for one, and the more expensive it is, the more dollars they have to convert. Okay, it's just simple mathematics, right? The more expensive oil is, the more dollars it's going to cost them. So now you're looking at a lower cost. Their margins will be better. Their cost of production is going to go down drastically over the next 6 to 12 months, and you got to think about that. That weighs in with the tariffs. Okay, so think about this. If everything just stays neutral, okay, tariff or no tariff, any way that goes, that benefits Japan and the U.S. dollar-yen relationship as far as for the bears, meaning that even if there's a strong dollar, if crude weakens, like let's say we have a crude $20 lower 12 months from now, okay, just on a fundamental basis, that should pull back the U.S. dollar-yen, I would say, every bit of 10 to 12 handles, which means now you're trading at 156. You should be trading probably around 144 come the end of the year if you had that kind of a movement just in oil alone. Let's just say that yields stay in a range trade for the year. Let's say the Fed only cuts a half a point and they retrace maybe just slightly. That would be a little bit bearish for the U.S. dollar-yen relationship, but not necessarily too much. Okay, that could maybe get us down to around the 150, maybe 148 level. But to really get down towards the lower 140 handles, you would see that happen because of a big slide in the crude oil price because of the cost of production. And then you throw also lower yields, the cost of capital also goes down, the carry trades reduce. All these functions mean that it actually helps to drive the economic engine, which also is a forecaster for the U.S. dollar-yen relationship. So I would say that I'm not going to call a top in the U.S. dollar-yen right now, but it's very likely that the highs that we've seen probably over the past few weeks that we've been buffering off of, those may be the highs for probably 6 to 12 months. It could be. I mean, we may still have one more run up. It depends on yields. You have to watch. If we get a really big spike in yields, if bond and 10-year prices start to tank and hit the lows again, then we might see one more run up and may see a spike. But I can't see the U.S. dollar-yen holding a relationship above 158 or 160 for very long. If it was to spike up there, I could see that, but then I would see it, as markets go in, they come out, and then you might see that as the top. But right now, I would say we may be seeing the top actually right now for the U.S. dollar-yen if the fundamental relationship of crude oil and stuff, stays the same. Now, obviously, if crude oil goes back up to, the $80 level or higher, that would change things, and that would obviously accelerate the current uptrend in the U.S. dollar-yen.
It's a great education, man. I love that. And it makes so much sense in terms of the fundamentals drive the market, right? In terms of commodities, what are you using your currencies for? But not a lot of people understand it. I appreciate it. Can you stay with us for one more segment, Teddy?
Sure.
All right, we'll come back. I want to get your take on a couple other things. We'll stay with Teddy, folks. We'll come right back. And yeah, check out that dollar-yen. I put that dollar-yen, Teddy, going back to 1971. We'll talk about that when we get back to it. Stay tuned, folks. Welcome back, folks. We're talking to our man, Teddy Kekstadt. Don't forget to check out that Tiger Forex Report right under the newsletters tab, folks. As I mentioned, $97 a month. It comes with a 30-day money-back guarantee, some great info in there. And Teddy, as I mentioned, just remarkable. When I pull up that dollar-yen on Thinkorswim, it goes back to 1970. But, man, you're talking about levels that the only thing that we've seen weaker than this, right, is you got to go back to like 86. Is that right in the yen where we push in? And then that's a different era, of course, but pretty remarkable, those lofty levels, and anytime recently, not even near where that was from 75. Do you ever look at that type of action when you're looking at it? I mean, just from a longer-term basis, remarkable how you look at that chart. Anything in modern times, you could say, in terms of lofty levels for the yen.
Yeah, absolutely. When it comes to my, especially when I'm looking on a yearly basis, I definitely look at the long-term charts and also try and compare historically what was going on at the time. Now that's where sometimes we have, some big indifferences, if you will, depending on how far back in time you go.
Yeah.
And also policies. You got to remember that, especially with the U.S. dollar-yen. It was last year that was the first time the Bank of Japan had made a move in over a decade. Right?
Remarkable, right?
So there's certain fundamentals that we talk about our Federal Reserve all the time. when it comes to the yen, we almost never talk about the Bank of Japan, right?
Yeah.
I mean, it's just, I mean, now that's not the same when we talk about the euro or the pound. Those central banks could definitely have more activity than does the Bank of Japan, for sure. So, but yeah, I definitely do look at those relationships, and also, look at where were like the commodities at that time too. Was there a spike, or was there a bear or bull market going on there? Because there is a cyclicality to things, without a doubt. So I do use the long-term perspective. But when it comes to once you start going out on a yearly, on a monthly chart, going back decades and stuff like that, it starts to get a little bit harder on your relationship, because certain currencies didn't exist. So,
the world was a different place. No, totally, man, totally.
Right.
Teddy, thank you so much for the time, the education, as always, man. I look forward to talking to you next week on Fed Day too.
Right. Take care, Tommy.